This is the pound yen on the 60. We have a triangle. We have already had the confirmed breakout. So what I've done is I've actually dropped to the 5 range and been aggressive with the entry because with these breakouts we do typically break out with some force. We're going fairly directionally at the moment, so let's do the higher time frame and then I'll talk through my entry. And haven't got an optimum entry, but I've got the entry after the breakout. So structure level on at our lows, we've clearly violated them. Coming down to a psychological number 140, 1.40, no 140. Let's go to the 240. Take a look. Clearly bearish here, bearish, lower, move lower, pull back, move lower, sideways movement. That sideways movement is a sign to me that there's a breakout pattern. And okay, so we had a directional move. We then had the market adhering to this trend line, and then along the top we had the market consolidating, and we can have it that way, and we need a minimum of 4 touches. 1, 2, 3, 4 was actually there. If I just position this correctly on the closes of the candles, we came up for another test. And then you can see just here we have had a lower low, lower close candle. And if I do put, actually bring this structure level down to where the market is now closed, you can see that we have now violated the structure lows. This is a violation, and so we would be looking for that 127 extension. And I can be very aggressive with the entry because, again, it's a breakout pattern and we tend to break out very directionally. So I do drop down to the lower time frames. In this instance, I have dropped down to the 5 range. Okay, just leave the 127 on there. Let's go down to the 5 range. So we had a, come on, I move lower, I pull back, I move lower. So this is now the outside return. You can of course wait to get a lower low, lower close candle here as the entry. I haven't done that because I am more aggressive with these trades when we break out. Stops have gone an ATR plus 2 pips above the high. So I've gone 7 pips above the high and playing for that 127 extension minus 4 pips. So in terms of the risk then, we're looking at 22 for a reward of 26. We're back. I did forget to mention one thing and I just want to point it out right now. If I go to the 15, which I didn't do before, then we had this. Can we clean this up a little bit so we can see it? Okay, this candle right here. Big old doji. Look at the long wick to the upside, and we closed right down at the bottom here. Clear sign of rejection. And as I say, as we went to the 5 range and we'd put in that this outside return, this was more confirmation that there was lots and lots of selling pressure up here. So it really was an appropriate place to put the stop loss. We're back for a little update, and stops were 5 pips plus 2 pips above the high here, so you can see it was in an appropriate place. Structure was held. We held the outside return. I just want to clarify this bit here. If I put a structure level on, this was our structure highs, and we had a wick here, and so unless we closed above that wick, this is still valid for trend continuation. And since then we have started to work our way down. Let's go to the 15, and you can see then we are now back down at this level. I am expecting this now to break through this level. We could have, and I did talk about this, is you could wait for the pullback once we have this break below here. Typically, and I don't have just a general rule that I do this every time, I just weigh up how the market is moving. Typically when we violate like this and we're in a breakout pattern, I will enter aggressively because a lot of the time we just rally down. Okay, now in this instance we pulled back, so then this is a simple pullback trade where you look for an entry. As long as we hold structure, you look for a lower low, lower close. there it is. You would have gotten far better entry than I did. However, if the market did continue straight down, because this is a breakout pattern, I would have banked the profits and you wouldn't. So there are always swings and roundabouts. We came close to my stop loss, but due to good position sizing, I haven't been hit. Of course, I'm not out of this trade yet. You know, this thing could still turn and go back up for another retest, or it could just drop. After this little bit of playing around and the fact that we are back down at these lows, I would expect here for us to come lower, but don't hold me to it. And we're back for an update. We are now pushing down towards those targets. 20 pips up, 4 to go, plus we've got a spike through, so maybe 6. So yeah, we're looking at about 26 pips of profit here for this particular trade. I am just going to reduce the risk down a little bit more. Risk management is absolutely key to me wherever I can reduce risk in a safe way that doesn't, I don't want the market to come back and freakily stop me out and then it turn and go and hits targets. I've done that in the past many years ago, and I am not fond of it, because you've gone through all the trouble of coming across a trading opportunity that meets your rules. You got your entries, your stops, your targets. You're a little bit too aggressive with reducing down the risk, and market just suddenly just reverses 20 pips, stops you out and instantly turns to hit targets. So just waiting here now, 21 pips. We'll give this a few minutes. I'm hoping it's just going to rally straight down, not to make this video too long. If this hits, I hate talking about this, I hate bragging about this, but I do it because I think it's quite insightful for me, but for also other traders that are maybe learning this type of setup. I've talked already about this. We had the lower low and stops above the high here, and that's exactly what happened. And I can do that, I can be more aggressive here because we've had a breakout pattern and we're breaking out. Typically, if I'm honest, we break out with a lot more force. Haven't quite done that, but the same rules apply. You know, if you can read structure, you know where the low is, you know where the outside return is, you know where your stop goes. On the lower time frame, I always give it an extra 2 pips because it is the lower time frame. And you know, it's looking like this could pay dividends. I hate saying stuff like that just in case it just reverses the other way. So I'm just going to stum until this thing hits. And we're back, and we have now rallied down to hit those targets of plus 26 pips. Wow, the winners are just winning. I don't know what else to say. That puts me on around, I'd have to work it out, 350 pips for the week. Lovely winner. Triangle plus 26.